How pet will give you that edge few investors have and set you on the path of financial freedom. Hello and welcome to the special pet video series. My name is Nathan Ayotte, the creator of Pet. Today we will be covering how the Pet tool accounts for two important items. One, flipping property, and two, tracking your financial options with lenders and banks where you plan to seek financing. If you don't already know, the goal of flipping property is when a buyer purchases real estate with intentions to sell it within a few months for profit. In other words, instead of long-term rental, flipping targets short-term capital gains. This may include a fix-up or purchasing well under property value and then reselling it. Enormous profits can be made through flipping property quickly. In addition, I will cover a bonus tab on the full pet version that allows the investor to account for and track offers that lending institutions make to you, causing them to compete. And guess who wins? You do. I'll show you how to do that and how to be most profitable. Okay, with that said, let's go to the full pet version. Okay, welcome back. So what you're looking at right now is the full pet version on the Flips tab down here in blue. We'll also look at very briefly the flip tax bracket. So you're going to notice here that the interface is slightly different than what you've seen in the past on the owner occupied and the tenant occupied in prior videos. The Flips tab, as I've already mentioned before, the main target for a flipper is to maximize their capital gains in the shortest amount of time possible. Now, sometimes flippers, they can turn around their property from a buy to a sell in 2 weeks, 3 weeks, 4 weeks. It may take a couple months, but typically it can be a very fast time frame to maximize the capital gains. Okay, so with that said, I'm going to go ahead and run a case here on the Flips tab. And so you can see some of the differences between the other tabs we've looked at before and really how the Flips tab operates to calculate what your capital gains will be and various other factors to help you become profitable. Okay, so I'm going to go ahead and run a threeplex on this case. So let's go up here and click threeplex. Let's say it's a $250,000 property. Let's say it's 10 years old. Let's say it's 3,000 square feet. Let's say the lot area is 12,000. You'll see here there's a realtor percentage, which is different from what we've seen before. The realtor percentage is how much the realtor that you're using will receive from the sales price. Now that's 6%, which is actually quite a bit. And we'll look at another case where we can actually see if we sell the property ourselves without the use of a realtor, how much profits that we'll actually be able to keep. Okay, now let's look at the mortgage information. Here you're going to notice some changes as well. Here we have under the mortgage payment, you can click either no or yes. You will find that often many flippers come in with an all cash offer and they don't use financing. So as a result of that, you have an option if you are going to have a mortgage payment, which means you are going to have financing, or if you are going to come in with an all-cash offer, then you would click mortgage payment no, and a lot of the other cells here will go to 0, as you see here. Okay, now the MIP, we'll leave that the same. As for the down payment, we won't even need to change that because of the mortgage payment, which is set at no, so this is automatically goes to 0. Interest, property tax, mortgage insurance, all of that remains the same as we see here. Okay, moving on, following the arrow to the cost box, here we have closing with mortgage. Now, even though we're coming in with an all-cash offer in this case, there sometimes is some closing costs, a few associated fees. It's not very much compared to a financed loan, but sometimes there is some expenses that are incurred. Let's just put $500 here. Let's say the utility is $50 a month, FHA closing, there is none. Then you'll see here these cells in white, which we have no need to change. However, we do have a little bit of bearing on this repair cost. Let's go to the repair and maintenance cost down here. And the only thing I'm going to change, I'm going to go ahead and put $1,000 under the labor cost. Let's just say we had an additional $1,000 that we needed to take care of the property, to fix it up the way we wanted it. Going back to the flips tab, we see here we have $1,400 now. That's the $1,000 plus a property and termite inspection as well. Okay, moving on, following the arrow, let's put our purchase price at $250,000. I'll make it the same as the listing price. Here's the term. Now, we don't actually have a term. This is non-applicable at this point because we don't have a finance loan here. So you could actually put 0, you could put 10, it doesn't matter. The tool has already rendered this one non-applicable since we put a no for the mortgage payment cell right here. Okay, property insurance, let's just say that's $50 a month. And here we have price per square foot, and loan amount you'll see is 0, which is right because we aren't taking out a loan. Okay, now let's look down here at the property sale price. The purchase price, we have assumed that we have purchased it at $250,000. Let's say that we try to turn it around and sell it for $290,000. Now, let's go on to the tax advantages. Here, the time indicates the amount of time that you would assume you're going to hold on to the property before you sell it. Let's say it's 4 months. Here you have the tax rate. I'll just leave that at 20%. And here you have the tax information. Now, moving on down to the investment box. Here we have an ROI we see of 177.5% and a capitalization rate of almost 6%. Now we see the ROI is significantly larger from the cases we've seen before. And that's because we're trying to acquire here a large capital gains over a quick period of time. And you can see down here the bottom line, this is where it's really important. We see the cost to this entire transaction is $25,130, but the capital gains is $14,870 for this case. But you can see here that the cost is $25,000, but the capital gains is almost $15,000. So you may ask, well, how can the ROI then be 177%? Wouldn't it be significantly less than that? I mean, you're not even getting what the cost you put in. Remember that this is over a 4-month time frame. The ROI is based on 1 year. It's the return on investment over a 12-month period. So that's why it's actually quite a bit larger ROI, because you're flipping this property for almost $15,000 in capital gains in less than 6 months. Now this number, $14,870, actually accommodates for a 20% tax rate. But if you're looking at what the bottom line amount of money that I am going to pocket through the end of this transaction, you're free to go ahead and put a 0 here in the tax rate, and that actually will show you the value before your taxes would be taken out at the end of the tax year. And of course we see here it's $18,050, which actually gives you an ROI of 246%, which of course is very attractive. Okay, at this point I'm going to go ahead and refer to the flip tax bracket since I brought up the subject of taxes. Now this is no different than what you've seen in the past on prior videos. This is the tax bracket here, and you can populate your information to fine-tune what your tax bracket will be. And then just look at which status that you would be filing, take that tax rate, and then plug it into the flips tax rate here, and you'll be all set to go. Okay, now I want to dive into it a little bit deeper here. Let's say that we want to identify what sales price for this purchase price here, $250,000, would we need to sell the property at to make sure that we come out with at least a 150% return on our investment. Now that's actually very easy. And let's actually keep it at a 4-month time frame, because you may say, well, I want to get it out of here in 2 months, but let's still be very pessimistic here. So all we need to do is toggle the sales price to see what price we would need to sell the property at to make sure we got at least 150% ROI. Okay, let's go ahead and throw in $270,000. Okay, we see here it's negative 10.5%, which means we're going to have to make significantly more profits on our sale. So let's go to 80. Okay, now we see 121%. So it indicates we need a larger sale price. Let's go to 85. Okay, now we're at 185%. So we know we've actually gone beyond what we would need to sell the property at to acquire 150% at least. Let's go to 83. Okay, we're at 160%. Let's go to 82. Okay, now we're at 147. So I would assume it's probably a little bit between 282 and 283. So I'll go 282, $300. Okay, and we're about 151%, which is close enough. So we know purchasing a $250,000 threeplex in this case, we would need to sell it at $282,000 and about $300 to obtain at least a 150% ROI. So it allows you to identify very easily, based on the circumstances in this case, to get that ROI. Okay, if we look here at the capital gains, it's still really attractive. It's $10,821 we would be able to pocket. Now, at the end of the tax year, of course, if we want to see what it will look like after taxes will be taken out, that would be, let's say, 20%. Then it goes down to $9,087. Now, I want to show you the difference in ROI if, let's go back to a 0% tax rate. Now, we can see here it's the 150% ROI that we were targeting. Now, remember, this is under the scenario that the realtor percentage is 6%. Notice what the realtor is actually getting from this transaction with doing business with you. Almost $17,000. What if we didn't use a realtor and we did our own marketing ourselves? We would simply put 0 in the realtor percentage, and notice before I click enter here, I want you to notice the change in the ROI and the capital gains by not using a realtor. If I click enter, watch the change. We have now went to an 1,800 ROI and a capital gains of $27,759. We have just recouped the cost that would have went to the realtor that we were able to keep ourselves, which massively changes the profits of this scenario. So it's really up to you on what you decide to do. Of course, having a realtor does help. It could make your transaction time quite a bit faster. However, it's a large amount of profits that are given out to that realtor every transaction that you do that could really minimize the profits that you otherwise could be pocketing. So keep that in mind, and you can very easily see that using the PET tool for these scenarios. Okay, at this time I'm going to go ahead and change the case back to the way it was. I'll put 6% here in the realtor percentage, and I will leave everything else the same. Now again, this is the case we ran to identify this $282,300 sales price to acquire at least 150% ROI. Now remember, this is an all-cash offer, but how would things change if we use financing? All we need to do is come up here and click Mortgage Payment Yes. Now we see that the ROI is 14% and our capital gains is $1,465. Now, obviously we see that the profits is substantially less. But the main reason of this is because we now are paying a $3,400 mortgage payment over 4 months. Let's say if we tried to sell this in 1 month, how would things be different? You can see here we have an ROI of 431% and capital gains of 8540. So even though we use financing, it's okay. We just need to ensure that we flip that property as soon as we can. Okay, that covers the flipping tab. What I'm going to do at this point is actually introduce you to the bonus tab called the Lenders tab down here in black. I'm going to go ahead and click this. So what you see here is a table consisting of 5 contacts. So what each box consists of is the contact information of that particular lender or bank, and then really the breakdown of the mortgage. As you can see here, the interest rate, property insurance, property tax, etc., and then the mortgage. So it lets you see very transparently, either through a good faith estimate that the bank or the lender had provided, or perhaps just a general email of information of an estimate of what the mortgage will actually be. And it makes it very transparent to see. Now, it would be most profitable and beneficial for you as the buyer to find multiple contacts of banks and lenders and populate this information, comparing each offer to each offer and seeing what different banks and lenders are going to provide to you. With that said, then you would identify the lowest interest rate. Typically, the lower the interest rate, you're going to find the lower the mortgage. And when you identify one of those banks or lenders, here's my instruction: don't accept it. What I would do is I would go to the next best bank or lending offer, which in this case here is John Doe number 1, and I would talk with them and say, well, look, John Doe number 2 is offering me a 4.625% interest rate, and you're offering me a 4.75% interest rate. I would be happy to go with you as John Doe number 1, but you're just not offering me the best rate and therefore the best mortgage. But I would like to go with you. If you can offer me, let's say, a 4.5% interest rate, I'll go with you right now. And that's, you want to word that the way you would like to be most persuasive. But what you're wanting to do here as the objective is get banks and lenders to compete for your business, because they want to loan you money because, of course, they acquire profits themselves through the interest you pay on the loan. But you have multiple lenders and banks that you have association with. And so therefore, you can get them to compete over your business, and of course, you win because you get the best financing. That's how you want to approach this. You do have down here a canned email that I have written that provides the necessary information that most banks and lenders ask for, so they will give you a good faith estimate or give you a good breakdown of how the mortgage and the financing will be. So this is really helpful for you as the buyer that streamlines your process. So this is an awesome tool that I use regularly when it comes down to the nitty-gritty of getting financing. And this will be really helpful for you too. Okay, I'm going to go ahead and transfer back to the Flips tab. So at this point, let's recap. Do you see how one can easily evaluate flipping property using the PET tool? It takes little time but provides that extra edge that few have. Again, flipping can be a very lucrative avenue of real estate. If that's your forte, then go for it. As for the Lenders tab, just as you would shop around for a well-priced car or home or vacation package, wouldn't you do the same for a loan? The PET tool offers means to record banks and lenders' good faith estimates and financing they offer to you. When all the information is transparent, you can make a wise decision on which institutions you want to compete to ensure you receive the best financing possible. Wisdom makes wealthy. And I want to make very clear that is so very true. Okay, for some practice for some profits, go ahead and run the following case yourself. I'll give you the following details of a property to be flipped, and you can run the case to see what the profits would actually be. So it's good practice for you using the limited pet version. So here are the details. It's a family home, and it's listed at $150,000. It's 10 years old, and it has a square footage of 1,800 square feet and a lot area of 5,000 square feet. The realtor percentage is 6%. Now under the mortgage information, it's an all-cash offer, so the mortgage payment is set to no. Now for the rest of the mortgage information, it's really irrelevant at this point since it's an all-cash offer. The property tax though is 1.25%. Now in the cost box, you'll see the closing with mortgage. You'll set that at $300 and utility is $60 a month. The FHA closing is $0, and that concludes everything in the cost box. I will mention the repair should be set at $1,000. I know with the limited pet version you don't have access to the repair and maintenance cost, so that will just have to remain the same. Now moving on to the finances box, the purchase price is the same as the list price at $150,000. The term here doesn't really even apply since the mortgage payment is set to no. It's an all-cash offer. Property insurance is $40. Now I'm going to go ahead and skip the property sale price at this point and go on to the tax advantages. Set time at 2 months and the tax rate is 20%. Now, with all those inputs, I want you to identify what sale price that you are going to need to ensure that you have an ROI of at least 200%. Okay, so again, you want to identify what the sale price is to get a return on investment of at least 200%. You can send me an email at nathanayot1@gmail.com. You should see the email on your screen. And you can send me your answer and I will let you know if you're right. Hello there. This concludes the final video of this pet video series. If you are watching this video, I want to personally thank you and congratulate you for taking the time to educate yourself on the real estate industry and your interest in the property valuation tool. With that said, I encourage you to visit the Buy Pet tab on the PetEvaluation.com website to own the full pet version yourself. For a 20% discount on the full pet version, you can visit the Buy Full Pet Version Here tab from the limited pet version you've already downloaded. Remember, every piece of real estate you make an offer without the pet tool is making a gamble on several hours of your precious time and thousands to tens of thousands of your hard-earned dollars. It's just not worth it for a tool that costs less than $100. As you may have heard of before, if you keep doing what you've always done, you'll keep getting what you've always got. In closing, I hope you are prosperous in your future real estate endeavors. Please contact me via email if you have any questions regarding the pet tool. You should see it hovering above my head. Okay, well with that said, I hope you much wealth, freedom, and happiness. Have a wonderful day.